Nischal Maheshwari, co-head institutional equities and head of research at Edelweiss Securities, is joining us right now from Mumbai. Nischal, great having you with us. It's an absolute pleasure once again. As we approach the election time, a lot of people are now more and more focused on elections, the outcome of the elections and their impact on the markets. But as we progress, the action at the center is getting hotter and hotter. We have new entities, new parties jumping in the fray, new allies are coming in, we have unusual alliances being made. Is that changing your perspective towards the market and how the election outcome could actually impact the markets going forward?
See, obviously what the polls suggest at the moment is that NDA is in the front there. Obviously, the two swing states are UP and Bihar for even the NDA alliance, and any changes which happen in those two states, basically it's going to impact. And plus, if there is new alliances which NDA can get through on a pre-poll basis, especially in the southern states, since they do not have much presence out there, will definitely be interesting. So I think these are the two or three things which from a market perspective one should keep on looking out for.
But is the market prepared for Aam Aadmi Party's inroads into the election outcome? I mean, they've started their poll campaign and they're actually now beginning to raise a lot of pertinent questions around NDA, around several political outfits, around several corporate outfits. That's a different matter altogether. But how important is Aam Aadmi Party's emergence, and would it be a big setback to how the markets perceive the election outcome to be?
See, I think it's too early for Aam Aadmi Party, and that's why I don't think so they will make a big dent as far as the current elections is concerned. Obviously, they possibly can become a big potential force post the, I think, in the coming years.
Okay. So does it mean that the market for now is completely factoring in a BJP-led victory at the center? Is that safe to assume?
Yeah, market is expecting that NDA-led government, there is a high chance, high possibility of them forming the government in the center.
Okay. So Nischal, how would you look at the fundamentals as of now? I mean, let's keep elections aside. Let's talk purely on the fundamentals. A lot has to be done. Obviously, the onus of performance on the next government is going to be pretty high, and whether they match up to that or not, that's a difficult question that I think only time will tell us. But for now, how are fundamentals according to you? We've just concluded the earnings season. Most of the macro data is out of the way. March tends to be a subdued month. We don't get to see much data, but obviously monthly data on auto, cement, and then of course inflation, IIP would be important to track. We have the Fed decision, we have RBI decision which is anticipated. So how would you put all these factors in context?
So I think for India on a broader scale, the macros are improving. So whether it is a question about inflation which has been coming down, we continue to maintain that inflation is on a downward trajectory. We have to continuously focus on and see basically whether the core is also started letting off steam. So I think that's what I believe about inflation. Current account deficit already under control. We are at 2.5%, which has been the long-term average for the country. Fiscal deficit, this government has done a very good job, and I think they have been able to manage it properly. So I think fiscal also for the moment is okay. The only question still remains to be where will the growth come from and whether there is enough demand in the economy or not. Now these two questions, obviously I don't think so you will get answers in a hurry, and I think it is only going to change and turn around only as the economy comes out of this downturn and we see interest rate easing. So I think that's at least a couple of quarters away before we see any improvement start happening on the economy side.
So what's your investment strategy at this point of time? What is your research telling you? Where should investors invest at this point of time?
So, important event is to happen in May 14 when there is central elections is coming through. I think one should position according to that. And what we believe is basically if there is a chance of a change of government in the center, or even unless a third front led government is not coming, I think there is a fair possibility that the fundamentals will continue to improve, and that will be positive for the market. And what we are asking people is to add some beta onto the portfolio, and that beta could be through either banks or industrials.
Can you expand the list a little bit? When you talk about industrials, which sectors, which sub-sectors would you look at? A lot of people are actually pegging sort of a revival to the formation of a new government at the center. Does that also mean that infra pack could see some buying at these levels?
Infra, yes, some of them have started showing value. Basically, people who have been executing well, I would be focusing on them rather than buying the whole infra pack in total. The second thing one can look at infra is the asset owners, and asset owners, people who have been able to bring down their debt to a manageable level and still have their working assets with them. I think those are the stocks one can play in case of asset owners and infra.
But Nischal, is it safe to assume that this market is still extremely polarized? We talk to experts all the day, and the one common sense we get from all of them is that still makes sense to stay in the IT and pharma space. Nobody is willing to get into banks aggressively. Nobody is willing to get into infra, capex-led sectors aggressively. What's your thought on that? The singular preference for IT, pharma still continuing.
So it is not that people are playing defensive, because IT and pharma both are showing pretty good growth, and a depreciated rupee is supporting them. So is the world revival. Whether it is the US or Europe, it's going to do better than what they did last year. So I think that is what is driving both these sectors, and I continue to agree with most of your other commentators that IT and pharma should be your overweight sectors. But I also believe that along with those two, I think you should be adding some beta to your portfolio, and I'm overweight both industrials and banking in my portfolio.
Okay. Nischal, what was your assessment of what happened as far as the power sector is concerned? The CERC norms for FY15 to 19 have been hugely negative for NTPC. On the other hand, compensatory tariffs being allowed for Adani and Tata Power have given a big boost to the private sector majors.
Yes, so I think market is taking the news and NTPC much too strongly. What is going to happen is NTPC's ROE, which used to be around 21% on the operating assets, will fall to around 18 to 19%. And I think that's also a pretty good number basically. The second thing, what market is taking 1,000 crore loss basically happening because of this fall. What I believe is they have not taken into consideration that there is going to be a saving of around 600 crores from the waterfront, where the water is now been allowed, charges have now been allowed to be a pass through. So net I believe it's going to be around 400 crore loss, one-time loss, which is going to happen to the company. But yes, incrementally your growth numbers will come down. So our DCF, which was around 158 rupees, is down to 151 for NTPC. But I believe that at these prices with a 5% yield, it is a very good stock to pick up. So there has been an overreaction. As far as the private sector is concerned, definitely I think CERC orders have done good for them. And both Tata Power and Adani, I think, is going to definitely benefit out of this.
Nischal, on Tata Power, what is the value to Mundra that you are now ascribing? To a lot of experts, the value for Mundra from negative is now close to zero. You share that perspective?
Yes. I believe it shouldn't be zero alone. It should be something more. But at least zero is definitely on.
Okay. But on NTPC, even though the news is incrementally negative, the stock is trading below its book value. Today also NTPC is down, and it's down quite sharply. Should a long-term investor get excited at the stock trading below its book value, or do you think NTPC is at best avoid perhaps once we get more details on this particular front, once more clarity is out?
I told you just now about my thesis on NTPC. It's a 5% yield stock at these prices. It's, according to me, it's a very good bet at these prices.
Okay. Within the banking pack, Nischal, I know we discussed that just some time back, but within the banking pack, the concerns on NPAs for PSU banks are actually increasing every day. I remember some time back when the quarterly results were out, we were all hoping that okay, this might actually be the end of the NPA cycle, maybe the bottoming out of the NPA cycle, but the concerns around United Bank are giving sleepless nights to even regulators now. How does that impact your perspective on the PSU space?
I am not a buyer of PSU banks. I totally avoid PSU banks. What you can look at is the private sector banks, and we have a buy on both ICICI and Axis.
But within this particular pack, within the financial pack, do you like the NBFC space as well? Any preference in the NBFC basket, particularly with the Jalan committee set to submit its recommendations to the RBI by this particular week, or by the end of this particular week, we are going to see some action on that particular front. How would you approach the NBFC space?
So, the banking license front, I think, is a different thing. But as far as NBFC is concerned, I am very clear that niche plays have to be looked into. So, whether it's a Shriram Transport Finance or a Shriram City Union Finance, which are niche plays, or a Mahindra and Mahindra Finance. So, I'm saying generic NBFCs who directly compete with a normal bank, I don't prefer them. I prefer basically very, very niche plays as far as NBFC is concerned. So I listed down these three companies which are doing a phenomenal job. I think these are the places to be looked at.
Nischal, as the April 1st deadline for gas price hike is approaching, we are going to see some action as far as the oil and gas pack is concerned, whether it's RIL, whether it's ONGC or some of the other ones. What's your current rating on the sector, and would you look to buy into some of those stocks with that particular date of April when the prices of gas are set to double?
See, that's still out in the open. I'm not very sure whether what's going to happen there. But what we prefer there is OMCs, the oil marketing companies, because most of them are available close to their book. And as the subsidy from diesel keeps on taken away by 50 paisa a month, I think these are good bets, basically both HPCL and BPCL. And we particularly like BPCL out there.
Okay. All right, Nischal. As always, an absolute pleasure having you with us. Great to get that perspective from you. Thank you so much as always for joining us right here on NDTV Profit. Let's take a break. We'll come back and get a more detailed discussion on the pharma space. Lots happening on that particular front. Ranbaxy, Pfizer would be our top stocks.